Good afternoon, everybody. Today we will be doing one more portfolio update. So I'm going to go through basically everything I have here, go over the gains, go over whatever. And just a couple things I want to go into immediately. I am very comfortably up on Celsius now. You can see the last five batches of shares I bought are now all positive. The only ones that are negative are the first two times I bought the stock, which unfortunately is the most, but I believe this cancels out fairly reasonable. And we can see the total gain here. The sum is positive $40. So I'll take $40 whenever I can get it. Chewy, again, we are up just about 9% on. We're actually up 7.7%. For Celsius, we're up right around 7 to 8%, I think. Probably a little less than that just because this is the average, but the weights here aren't the same. Yeah, that is just the average. Something to think about. So, for example, for Chewy, I'm up probably about 9%. Cerent is still looking very strong, despite the stock price kind of dropping down to, I believe they're at right around six. I think they're still above $6, but I'm not sure. But again, up well over 100% on all of it. Crocs looks good, right around 10% up. Dollar General, I'm very close to being positive on. I think I'm only down about 1%, maybe a little less. And for a new announcement, basically, I have two new stocks for the past week. I made a video on both of these, and then I just released a full review on Performance Shipping. But I bought Performance Shipping and then Global Mofi AI. I don't know how to say that, but I bought both of those. You can see I'm already down on both of them fairly significantly too. I'm down 12% and 7%. Now, again, both of these companies I bought very little of, and I bought them for the purpose of having very, very small, high risk companies that are financially fairly good. So I really just wanted to have a little bit of exposure in that area and kind of find companies that, in my opinion, at least, were financially solid and have a ton of potential upside. Like, obviously, there are companies like PayPal that I already have that I think has a ton of upside, but the ceiling there is they already are worth, I don't even know the number, 40 or 50 billion, while Performance Shipping is quite literally worth 20 million. I mean, to be fair, I put $50 into it. And Global Mofi, I think, is right around 100 million. So these companies have a huge amount of potential growth that I really like. But yeah, that's about it. Basically, I like them. Robinhood, again, I'm up just under 60% on. Lululemon, I'm up 30% on now. They have seen phenomenal growth. But another thing I'm going to do for the whole portfolio review is go through the charts and just show kind of what I'm seeing and why I enjoy these companies. So one thing with Celsius is they were in a fairly long-term channel over the past 2 or 3 months, and you could see they have fairly significantly broken out of that now. They could just be forming a new one that has a bit of a shallower slope, to be fair there, but it looks like they have broken out of that and could be heading back up to right around the $35 range if I had to guess for short term. Long term, I think they could go significantly higher, but looking at Chewy next, Chewy just recently bounced off of a support zone. You could see, I don't remember when I bought it, to be completely honest. I think it was right at the beginning of November. I totally forgot, I could check. So yeah, middle of October and then into the past month, I've been acquiring a few more shares. And you could see they have been doing fairly well, bouncing exactly where I said it would and rising all the way up to 35. So this is right when I bought it. I think I bought it, I keep forgetting, it literally tells me. So I bought it October 14th. You can see that is right about here. I just really like the company. I bought more November 4th, right around here, and have been acquiring a few more since then. I just genuinely believe, just based on their long term chart, they are going to go much, much higher, in my own opinion. So I really like the stock. Next one is Cerence. So Cerence, I bought October 10th. And if we go to their chart, you could see where they were October 10th. So I bought right around here, actually just a few days after they went up 40% in one day. I bought right around here, and then I bought a few more down here towards the end of October 18th and the 23rd. So here and then here, and then obviously rode that out, and now we are here. Now they have been dropping for 3 straight days fairly significantly. I do believe that the value is there and they will be holding. Um, but obviously, with people taking profits, I mean, it was literally above $9 a share after being at 280 just about 2 or 3 weeks ago. So completely understandable that it's dropping now. I still expect it long term to go higher than this. But overall, the value that we're at now, I think, will be holding for at least until the next earnings report and probably for around the next year. I doubt it'll go. Obviously, I really don't think it'll go back below the $4 range or the $5 range. I think it will steady out fairly soon. But right now, we're just in a period of um, higher volatility. For Crocs, I'm up right around 10% on them. So let's check out the chart. I bought Crocs literally right here. If you check my thing, it should say November 15th or the 14th, and right around the 12th and the 14th is when I bought. So you could see right here. What I did was I saw them approaching this long-term support line that they had, and I literally just bought when they were close to the bottom of it. And that was it. And now I'm up 10% on it. Very, very easy. I'm expecting them to hopefully be able to reach back up towards the 130 range. Obviously, their last earnings report was decent. So I am kind of hoping for them to go higher than that. If they don't, I mean, my average is still fairly low, so not expecting too much. Now, their stock has been kind of in a massive wedge for the past just about 2 or 3 years. So it'll be interesting to see where they go in the next year. They're either going to decline or they're going to get all-time highs, which personally I think we will see all-time highs within 2 years or so with this company. So next up, we have Dollar General. Now, this is a little bit of a controversial one because they have been steadily and significantly declining for a bit now. I'm going into the week time frame just so I could show you how long they've been dropping. So starting right towards the end of the pandemic time frame, I guess you could say, they were dropping significantly right around the end of that after a few earnings reports showing that lowered demand and the lowered guidance. Now, I believe they have found sort of a support range here, which if we zoom out farther, we could see they are at a just about 7 year low from where they used to be. And actually, the first time they hit this price was 9 years ago. And just with how much their intrinsic value has increased in that time, I'm expecting them to be able to very easily recover from this area. I really don't think the company's in trouble at all. I will say they have a significant amount of long-term debt, which I think is a problem and needs to be fixed soon. But overall, I mean, you could even just see on the momentum index right here how low it is and where it was the last time they went from just about 102 to 160. So even just for a short-term trade, I think we could be seeing some fairly decent things. Um, but yeah, we'll have to see how they do in the future. Overall, I don't have a ton of this company by any means. So no matter what, I do think it's just a solid play. It's definitely undervalued from where it is now. So we'll have to see where they go in the future. Global Mofi, GMM. Now, this, as well as performance shipping, I don't want to say are like um, not serious investments, but again, I put like $50 into this. I'm really just hoping to see some increased growth. So their financials are really, really solid. I'll probably have a full review and analysis of them out in about a week or so, maybe a couple days, but we'll see just when I get to it. Honestly, I have a lot of companies I want to review, but they have been declining significantly. But their reports and news that they've had coming out is really, really solid. I mean, their revenue growth is very significant. So this is just another company that I do honestly believe in, and I think they could see a lot of growth. Just the market isn't recognizing that, and some of their past has been fairly negative. They did a few stock offerings that weren't exactly very smart. at least in my opinion. It seems like they basically did late stock offerings after their IPO to raise money, and now they're kind of starting from scratch at a much lower price. But overall, not too bad. Hims is another one that has been outperforming massively, up 40% on it, actually over 40% now. So you could see I keep forgetting to look at the date before I go into it. I bought Hims on the 18th, and I bought it in two batches. Um, October 8th. Oh man, I keep so sorry. November 18th. So I bought it right here on November 18th as it hit this support line. Based on their recent earnings report, I kind of knew the value would hold just based on how they were looking. So bought the stock. It has basically only gone up. It's a little bit down over the past few days, but again, this is another company where I am expecting the value to hold. I think they have a ton of growth that they can do, and they've seen massive revenue, margin growth, everything along those lines. So I did a review of them a while ago, but it's not the most in depth because it was just when I started making videos. But overall, I think we're going to see them performing fairly well. So next up is Robinhood. Robinhood is one of my favorite stocks of all time. It is a company I use. I use their app for a lot of trading. I love the company. I bought it on October 31st, Halloween, I believe. And so I bought two shares on the 15th. This was just to start a position. So it was like $50, no big deal. And then I bought eight more shares on the 31st to kind of solidify my buy. So you could see the ones I bought on the 15th, I was actually down on. And as soon as I saw that, I knew just based on this earnings report, which I thought was fairly decent, that they were going to be taking off, especially with how their crypto revenue has been doing. They have a massive market that they're just recently really breaking into. And I think it's going to be a massive revenue opportunity. So bought a ton right at the bottom, right here, only up since then. We are getting close to, we're actually now above their IPO price. It looks like, I think they IPO'd right around 40 or $38. I forget, but they were above it for a little bit. They were above 40. Obviously their all-time high is right around 80. And honestly, I could completely see it happening within a year, possibly within 6 months. I could definitely see it happening. So that is just another thing to be interested in. Next is Lulu, which I bought on October 24th. Now, Lulu, I actually reviewed in my internship that I do for portfolio management, and I just really liked the company. So I think it was October 24th. So I bought it right here. Their stock was fairly low compared to where it used to be. And also, I just loved their financials. They were excellent. They have massive sales growth, and their margins are very solid. So you can see they had a fairly good day, up 15% a couple days ago. Um, I believe that was based on just their earnings report being excellent. You can see they had an increased price target here. But yeah, Lulu is probably going to do fairly well in the next couple years, definitely a couple months. Next is performance shipping. So PSHG. So this is again a unique case where their stock chart looks terrible, and I am very aware of that. But one thing is I just like the company. Their financials are great. You could see they have broken down some support here, so there is a solid chance that they will be heading down. Um, Back towards the $1 range. Now, I don't know if this is going to happen. Again, I only put about $50 into it, so there's always the opportunity to average down there, which I most likely will. I don't think I will buy any more shares of this just because of how high risk it is until if it hits 120, maybe 125, I will be considering it, but overall it's no big deal, at least for me. $50 is not crazy. Um, Really, I'm just interested in the company. I think they have potential. And also, you could lower this to here to where these 2 points are and just say they're hitting the support line, which honestly they kind of are. So overall, I don't think it's anything too concerning. Their financials, at least in my opinion, look fantastic. And they're doing a lot of sales revenue growth. So I'm really not worried there. Um, Almost at the end, we have PayPal here. PayPal I have bought on October 10th. And if we go in, we can see where that is. So I bought it right about here, and you can see they've increased fairly significantly since then. PayPal is one of my favorite companies. I just love them. I think they're excellent. Their financials are excellent. The company itself is good. Obviously, they have stuff like Venmo and just their own PayPal platform. So I do think they're going to see very solid growth. Even like Apple Pay, I really don't think people are using Apple Pay that much. I mean, they just get PayPal on their phone and use that, or Venmo on their phone and use that. So overall, I really like the stock. That's basically all I have to say for that. Snapchat is a bit of a controversial one. A lot of people don't like Snap just as a company or a stock, but honestly, they're right up there with like Facebook and Instagram. Not so much with users, but just with like significance. Like everybody, at least in like high schools, colleges, everybody is on Snapchat. Everybody uses it. Influencers use Snapchat. They are increasing their revenue significantly. And I honestly think they are very, very undervalued. I mean, they have been growing very significantly just everywhere for this entire time. Again, they are fairly undervalued in my opinion. I do think fair value, just based on where their IPO price was, right around $25. I think their fair value is probably 30 or 40 at this point. Just based on where they were then compared to where they are now, I do believe that should be in that range. So that is just something that I believe personally. And then last but not least, I do have a mutual fund, which I'm up 8.7% on. That is my largest holding by far, basically just to balance my portfolio and give me some steady income. And then I do also have a bond here, which I'm up 2% on. I always have bonds in my portfolio, no matter what, but I will probably, once that is done, I believe it is expired, or I should say, I'll get the interest for that in January, and I'll be rolling that over into another one once it is completed. So that's another thing that I personally, at least, always say to people is you should have bonds in your portfolio just as stability, consistent gains, all that kind of stuff. So that's it for the portfolio review. Hope you enjoyed. Hope you learned that my stocks are doing great. I don't know. But yeah, that's about it. Thanks for watching. Make sure to subscribe if you haven't, and see you next time.